Okay, today we are going to be looking at the Medley Industrial Market, Submarket, and as you can tell, I'm not in my normal office. I'm currently in South Carolina. However, I did want to bring to you guys the latest market trends, making sure that we're not missing out on anything. The Medley industrial area, as you know, has 989 industrial properties, where we currently have 20 that are actively for sale, 6 that have closed in the last 3 months. We have 111 that are actively for lease, and we've signed 39 leases in that area over the last 3 months at about an average of $19 per square foot. As far as the asking, or the average asking right now, we're at $19.34 a square foot. And the trend on that one is that it has climbed over the last 5 years significantly. And this trend is pretty much the same across all the different submarkets, where we've seen the last 5 years have been a significant increase. So people that are coming out of those long-term leases are running into a bit of a shock when they go to renew those leases, because if they had started somewhere at the $12 a square foot 5 years ago, now they're much closer to 20. So again, that is a bit of a pill to swallow. If you are coming out of a long-term lease, again, this is your first opportunity. Reach out to us, because we may be able to get you into something, either a purchase, and we can show you the benefits of ownership over sticking with the lease. And this is a trend that you're going to see not only in the lease pricing, but you're also going to see this in the purchase as well. As far as the months to lease, you can see that it has been coming down, a little bit of an up and down, but the straight line trend right now is pointing to about 3 months. However, right now we're actively at about 5 months to get things leased out. As far as the dollar per square foot on sales price, we are at $275 a square foot. And the expectation on that one is that it will continue to increase somewhere in the beginning of the third quarter of this year. Again, we had a significant increase from 2020 to where we are now. And the expectation is that it's going to hold firm probably for another, again, somewhere to the middle of to the third quarter, at which point it's going to start to take off. So again, this kind of floats in line with the increased lease pricing and the increases in pricing. So if you are thinking about additional space or getting that first one, reach out to us. We can help you get that first space before those prices start to come up. And there's possibly the opportunity of maybe slightly lower interest rates, which again could drive up the prices if we get to that point. As far as dollar per square foot on the pricing, the star quality from the 1 to 5 star, the smaller stuff tends to be the 1 to 2 star. The older buildings, those small bays, tend to attract a lot more for dollar per square foot, and that goes in line with the graph that we have there. As far as the cap rate, right now the cap rate is at 5.8%, and that one is down slightly from 5.9. So we are seeing the fact that that is going to continue to go up. Continue to go down, and that is in line with the price increase and the rental increase that we're seeing. I guess the price increase is probably greater overall. And you can see this in line. So once again, in the middle of the year, you're going to see those cap rates start to drop down again. Now, that doesn't mean that the cap rates are not going to be good overall. As you can see, over the last 12 months, we've been anywhere from 4 to 8%. So there have been some good trades for people that were looking for investment opportunities out there. Again, reach out to us on that one. We also have some off-market properties that are currently there. We've got them. So reach out to us, and they could be some pretty good deals then in the 6 to 7 range, 6 to 7% range, that is. Now, as far as the cap rate by star rating, again, the smaller stuff tends to do a little bit better, to outperform, simply because they sell at a much higher dollar per square foot. As the last thing that we want to mention is the fact that we had, over the last year, 55 properties were traded in the Medley industrial area. Of those, 20 were actively marketed. So we know that properties, statistically speaking, properties that sell off market tend to sell for much less, anywhere from 20 to 30% less than market value. So if you are thinking about selling your property, reach out to us. And that would be the last opportunity where we can show you what your property is actually worth and how you can get the most for your property. Call us so we can show you those two different opportunities.